This is a demonstration of exercise 137, applying financial statement relations to compute dividends. And in part A, it states fill in the amounts for the Norfolk Southern statement of changes in retained earnings. So the problem has given us 3 years of consolidated statements of changes in retained earnings, but we're missing some information in each of the years. In the first year, we're missing the net income. In the second year, we're missing the dividends. And in the third year, we're missing the share repurchases. But since we know the relationship in the statement of retained earnings, we can calculate the missing amounts. So we know we start off at the beginning of the year with retained earnings, and we would add net income, subtract dividends, subtract any treasury stock that we repurchased, and if there's any miscellaneous amounts, in this case it's a negative amount, that would be subtracted to get to the ending retained earnings balance for 2016, which becomes the beginning balance for 2017. So we're going to use the information that we've been given to calculate the missing information. So for the first year, we're going to start off with our ending balance. So we have our 10,425 million. Now we're going to subtract the beginning balance because that's what we started with. So we're going to put in a negative and then just copy the beginning balance. Then we're going to subtract the dividends. But now notice that the dividends are a negative amount. So when we subtract a negative, that's actually going to be a positive number now. The same thing for the treasury stock. We're going to subtract that amount, and that's also going to be now a positive number. And the same thing for the other. Since it's a negative, it will become a positive. Now we have the missing amount, the net income, because we know that the ending amount of retained earnings minus the beginning plus the dividends that we paid out plus the amount we paid out for treasury shares plus that negative amount of other would be equal to, or the difference would be, net income, because that was what we were missing. And we're going to do this same process to find out what the missing amount of the dividends were the next year. Okay, so remember, we're going to start out with our ending retained earnings. I'm going to copy that. But we want to subtract our beginning retained earnings. Remember, your beginning retained earnings is your ending retained earnings for the prior year. So that will be subtracted. And then we're going to subtract our net income. So we go back up and copy that. And then we're going to subtract our share repurchases, but remember those are a negative amount for treasury stock, so that will actually add back. And then our other is also a negative amount, 5 million. So now we have our missing amount for our dividends. Again, start off with your ending balance for retained earnings and subtract your beginning balance. Subtract net income because that was added to get to the ending balance. You'd add back your treasury shares and then add back that negative amount of other. So that gives us our amount, our missing amount of how the dividends that we paid out that year. Now you would need to go and do the same process to figure out the treasury shares that were repurchased in the last year. Just use the same process. Start with the ending retained earnings, subtract the beginning, subtract net income, add back your dividends, and now you would actually subtract other because it's a positive number, and that will give you your treasury stock. Now, the B part says, is it true or false that Norfolk Southern purchased its own shares back during each year from 2016 to 2018? Well, once you know the amount for the last year, 2018, you'll be able to answer that question. We know that they purchased shares in 2016 and 2017, but you'll have to calculate this amount, and then you'll be able to answer the last part of this question, whether that is true or false. And that is the end of the demonstration for exercise 137.